Well, FB Ventures is launching its new fund of funds for retail investors, an Australian first in the venture capital space. Richard Mulligan is co-founder of FB Ventures and joins us now. Richard, welcome.
Andrew, lovely to be here.
Now, venture capital's sort of been off limits for retail investors here. So, what are you doing in this space?
We look at this. There's a twin check size problem in the venture capital space, and for a lot of people, the ability to get into it is actually too hard for check size. The minimum ticket size is so large that most investors can't get there. Then you also have that twinned with the problem that people need to be wholesale investors to actually be able to access wholesale investments. And we look at it and go, do you know, we can democratise access to this by actually leveraging our infrastructure that we've got within the group and actually building a diversified portfolio of venture capital and making venture capital an asset class as opposed to an individual choice, and through that diversification be able to offer risk mitigation, which then allows us to offer that to retail investors or wholesale investors that may not have the large check size.
What is the appetite for venture capital here in Australia at the moment, bearing in mind what we're seeing on markets at the moment, pretty much an everything rally at this point? So are investors looking for that alternative?
I don't think all investors are looking for that alternative, but it's for some investors. We're seeing a great change in how generations come through and how they look for their investment and what they look at their investor appetite. We're seeing new generations coming through that actually have a large amount of knowledge. They actually understand what they're investing in, they understand their risks. They may perhaps be cut out of the property market, they can't access it, so they're looking for alternate investments. And that's the space, for example, that ETFs lent into, very successfully, where people said, actually, I can access this directly, I can actually get it for myself. We see that for that select group, that venture capital as an asset class will actually make sense. People are keen, it's not all people, but people are keen to access it.
So you're talking about democratising access to venture capital or allowing those retail investors in then.
Yes.
Are there any particular barriers they need to overcome?
It's a retail fund, so there's no barriers from that perspective, but we need people to understand the risk of what they're investing in. It is not a light risk investment product. Even doing it as a diversified fund of fund, it's still the underlying investments are in the illiquid space. The underlying investments are at high risk. So we want to make sure that people really understand the risk metric. This is not for people who want to invest, who think, actually, I might want to get my money out in 6 or 12 months' time. This is long-term investment.
Yeah, you mentioned that illiquid nature of venture capital. So therefore, what? You have full transparency in that regard then. I mean, do you have a particular sort of investment term in mind?
We're calling it a semi-evergreen fund, just to be difficult to introduce a new terminology into the lexicon, but we can't call it a pure evergreen fund because that implies there's liquidity and people can redeem. But it's an open-ended investment vehicle, so we'll be accepting investments in, we're diversifying across many underlying investment managers and inside the venture capital space. So people should look at it as, like, we call it minimum 5 to 7 years because that's the way the regulator defines it. But people should look at this as a long-term investment and not see it as a short 2 to 3 year. We call it minimum 5 to 7.
Now, as you mentioned, so fund of funds, you're investing in multiple VC funds. How are you choosing those?
There are a couple of metrics that we actually choose them from, and it's a little bit different from your standard investment manager approach where you'd actually look at the investable universe and then you might go, I'll actually buy this particular stock. You also have to factor in that these funds, the underlying funds, are actually only open for certain periods of time. I mean, you take Blackbird, for example, is currently raising its Fund 6. And it'll be closed in 6 months' time, and they won't launch another one for 2 or 3 years. So there is, within that, you've actually got to look at what is actually available and how it fits into a diversified portfolio. But then within that investable universe, we're looking for professionally managed funds. We look to their people, we look to their investment philosophy and process, and look to operationally how they deliver it. So that we then have the benefit of the professionally managed VC firm that we're then diversifying across. So we're managing the manager.
All right, and what is the benefit for these VC funds, I guess, when they're looking for to raise capital, essentially?
Correct. We become an institutional investor on their cap table. And, you know, most markets have had difficulty with this. Australia is no difficult. There's a very small middle ground that invests in VC. And that's predominantly because most investors can't access it because the check size is literally just too high for them to get to. So we will actually represent an increased pool of investor appetite, but the manager themselves doesn't have to deal with the retail investors. We are.
And I gather you've also secured a grant from LaunchVic.
Yes, fantastic for LaunchVic to actually support this. LaunchVic is a wonderful organisation that really does actually look towards how can it actually grow the ecosystem, and their end goal is to actually go, how do we get more tech companies operating in the Victorian space, and how do we get therefore more employment in high-tech environments? And what they sat down with us, we were a little bit different from what most of the of what they supported, because normally it's direct investment. They set up a VC, or they actually encourage people to operate within the space. And with us, they looked at it and they went, actually, we can really see the advantage of having something like this that allows a broader range of people to actually invest into VC again as that. So it's been very helpful to have them on board with the grant that really has helped us launch and allowed us to actually get the product to market quicker than we otherwise would have been.
So Richard, if I'm your average retail investor here in Australia, what's your pitch? Why should I invest in venture capital, and how would you describe the venture capital market here in Australia?
Venture capital market in Australia, one of the ticket items that we all talk about now, and I think it was in Side State Ventures report that actually came out with this a few months ago, is that Australia has the highest per capita of unicorns, if you like, developed from the amount of dollars invested. And so we do have a very high-tech economy, and so being able to inject more investment into that economy is a big tick. It's good for Australia, it's good for the economy itself. As far as investing into it, it's an asset class. It's a part of an asset class that people can't get to. You diversify a portfolio. Why wouldn't you have exposure to it is probably the view that we take. Would it be a large part of anybody's investment? No, absolutely not. But why wouldn't you have access to that at the higher risk, potentially high return spectrum?